And when you gotta go live, you gotta go live. What up? It's your boy K Blauhood X for Corporate Algorithm. Am I live? Yes, I am live. Yeah. Am I live? Yes. Alright, cool. What's up, man? It's your boy K Blauhood X. We on Corporate Algorithm. The reason I'm here today is because I want to report to you the Apple earnings. Alright, this just came in at 5 o'clock today. Like, literally the whole market was at a fringe depending on what was going to happen with Apple earnings. And they just came in, and it was highly expected. People were waiting for this because Facebook had just lost like $150 billion. I don't know if you've been following this recently, you know what I'm saying, but they had just lost a lot of money. And what ended up happening is that they kind of drug the market down with it. And a lot of the morale, a lot of the fear kicked in, and a lot of people was about to sell off. That's kind of what happened, and we saw this with Amazon earnings as well. Like, Amazon earnings came in and it shot up, and it still went down just because the market was getting dragged. And so, it was a real, negative sentiment starting to set in. But Apple's earnings, the way it looks like it's about to literally raise the whole market because they have just risen to a whole new high, and they reported over $60 billion worth of earnings. All right, so what I'm about to do is show you. Let's do this real quick. I'm gonna show you exactly what this is. This is major, and then, like, if you follow my page, if you follow this page, you know that typically I ask to just do some paper trading, try it out, and see what you come up with. And but I'm pretty confident that let me see if I can get that. Here we go with this. Okay, let's try this, then this. Wait, alright, I gotta do this. Hold on, bear with me. This always happens when I'm live. If you know my video, wait, no. If you know my videos, you know this happens every time I go live. And I just want to use this opportunity to tell you to sign up for corporatealgorithm.ning.com. Boom, there we go again, still doing it. What do we got going on here? Why is this okay, so aha. And here we go with this. I'm trying to show you my screen, and of course, when you go live, and you start getting this stuff. Alright, what is this now? Let's see. Can we do this? No, we still can't do this. Still can't do this. Okay, so do this. Yes, of course. This is. Are we golden? Display caption, yes. Hail Mary, yes. Bam. Ah, look at that. We are good. We are Gucci. Alright, so I'll move this over here. Wait, where am I at, man? Hold on. Boom. There we go. Alright, I'm back. Alright. Thank you for sticking with me. Alright. So, what do we got here? We got these are the 10 sectors. So you can find this on Fidelity if you're new to trading. These are the 10 sectors. So you can see information technology. This is where Facebook is. This is where Apple is. This is where most of the most major producer stocks are. As you can see, they are highest up for the past 10 years. Next to consumer discretionary, they're at 250 for the past 5 years. That's what I'm going to say. They're up 153. And you can see, for the most part, going across the board, they the highest up. So you can see what I have right here. For the past 5 days, though, they've been down about 3%, which doesn't seem like a lot, but traditionally, the market on average moves about 1%. So 3% down like this for technology for a sector like that is major, and this is mostly because of what happened with Facebook. Facebook missed their earnings, and this was a lot of people lost a lot of money for this. So that's what this big red number is right here. So this is not normal. But what Apple earnings did is really gonna push it up, because Apple, let's do like this real quick. Let's come here. Apple, you see this right here? You see what happened after earnings? After the bell closed? See, this is today. This is 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock. Right after they reported earnings, boom, look at this. It shot up to 198. Now, if you scroll all the way out, you know what I'm saying, you see for the past few years, Apple has never reached this high. They just broke an all-new high. So this is major right now for not just Apple, but for the entire stock market. This is major news. So, you know, you follow this page, you know, I often tell people to invest, practice paper trading. Hopefully, if you've been doing your paper trading, you'll be prepared to make a trade like this. Because, like, this trade, you know, you can imagine just a shot like this, but you know, the trade that, you know, I taught on this channel, you know what I'm saying, is a very safe trade, you know what I'm saying, and if you know how to work that trade with this particular moment right now, you're gonna be good to go, you know what I'm saying. And you really got to stop and think, what am I really asking you? I'm asking you to invest in a 60 company that was making $60 billion, you know what I'm saying, just in one quarter. Look at this, you know what I'm saying. Apple projects $60 to $62 billion in revenue for September quarter, beating the estimates. The iPhone sales were somewhat diminished, and it still beat their earnings. Let's see, delivered an upbeat view of what's to come. Company reported for its fiscal year third quarter, posting earnings share of $2.34 on revenue of $53.3 billion for that quarter. Analysts surveyed facts said hey, projecting 2.16, you know, $2.16 in EPS and $52.3 billion in revenue, but they smashed it with a whole nother $1 billion on top of what they expected. So Apple is in full beast mode, even though Facebook is struggling. Through Apple once fell again short of Wall Street estimates for iPhone unit sales, the company more than made up for this thanks to selling more of its premium iPhones. Apple ended up with an iPhone selling price of an average about $724 in the June quarter, which is far ahead of its $693 analysts projected. So the phone cost about $724. And the spring quarter typically brings the lowest average selling. So typically in the fall they sell the least amount, but Apple's meaningful increase from the $606 reported in the June quarter. So it started out selling at about $606, but the iPhone went up to over $700, somewhere around $724 for a new iPhone. Pretty soon, the way that Apple is moving, you can expect a $1,000 iPhone pretty soon. Arguably the most useful number in Apple's fiscal third quarter report was September quarter outlook of $60 billion to $62 billion in revenue, which came above the FactSet consensus for $59.5 billion. Apple is crushing it. Typically, investors look to Apple's September forecast for the indications of whether or not the company expects to start selling new iPhones before the quarter ends. Jesus. Service revenue has become an increasingly important element. How well the company is able to monetize its installed base of users amid what Chief Executive Tim Cook admitted was lengthening upgrade cycle. Apple reported $9.5 billion in service revenue for the latest period, up from $7.3 billion in the year earlier quarter. Analysts had been projecting $9.2 billion. So they are just knocking all of their goals out of the park. So what are we talking about here? You're watching this video. Yes, this is obviously a call to get into Apple and make this trade, obviously. However, you know what I'm saying, if you've been passive about trading up to this point, you know what I'm saying, it's only certain opportunities that people get like this, and that, like, you know, like I just showed you, that this whole sector has been down. So it's a dip here. You look at the information technology sector. Let's see what we have. Do they give us the chart? Is this the one, or is it the other one? Let's see. Are we gonna get here? Is it open here? Okay, open here. Right. Information technology. So you see that this blue line here is the S&P. They're outperforming the S&P 26 to 13. They doubling what the S&P has done for this year in comparison. So, you know, the entire stock market, just this sector alone, is basically double, as far as performance wise, it's double what this year alone has done for the whole stock market. So Yeah, we see this sector has a market cap of $9.64 trillion. And this sector has recently, you see this dip right here, how it dropped right here, boom. That's what we're doing. Let's go to the 5 days. See, like you go on 5 days, this sector, you see how it dropped below the S&P, because this is what Facebook did, all this right here. So now it's starting to, Apple earnings is going to help push this back above this. When this crosses below here like this is an automatically sell off. This is like anybody, like whenever the line like this crosses through, this is a huge, that means it's going to start to do what you see here. Like they say when it rains and pours, that's, you got this going on. But if you look at it today, you see that, it's breaking that trend where it's starting to, it's no longer on an angle going down. It's starting to, move back, in an upper direction. So it's kind of reached. You see how this line is starting to form? It's starting to curve and move back the other way. So that's what analysts are expecting according to these Apple's earnings. So also too, if you look at here, like this is the all of the sectors. But we looking right. Let's look in where we at, technology. So these are all the technology stocks, and you can see for the past 5 days, these are the ones that's been up. AMD has been beasting, because they got some new stuff. And that's just the beginning of the day rally. You see, for the past 5 days, they've done over 13%. You see all these names here. These are the highest performing stocks right now in the technology sector for the past 5 days. But when you go in and you look for Facebook, you see Facebook right here, they still down over 19%. You know what I'm saying? That's almost 20%. They were over 20% of their stock. This has been chopping away at Facebook. You know what I'm saying? Today, in the past 5 days, they lost over $40. And they make up 6% of this whole sector. So that's why this whole thing is just dragging down, this entire sector. The sector right here is XLK. So I hope if you don't understand sectors, I'm hoping that you're learning what I'm saying. All these stocks basically make up this whole sector, which makes up the whole market. So when a big stock like Facebook, which is 6% of this whole sector, gets hit like that, not only does it drag down the sector, it's going to drag down the whole market. So that's what's been happening. But Apple, was basically in the same sector here. You see, this is major for this whole sector. So where's Apple at? Where's Apple? Am I missing? Hey, there go Apple right here. You see? So yeah, for the past 5 days, they only down 1%, but this is definitely gonna push it, back up over into the green. So there's a difference between money and currency, and the more you pay attention to the stock, the more you see companies like this hitting their goals. You don't work for Apple, typically, what I'm saying, but you want to follow companies like this that's hitting their goals, that's making major accomplishments. You want to see, man, this is $60 billion. You know what I'm saying? You do have an opportunity to get in on it if you make the proper trade and pay attention to detail. But like this it's only so many times in cycles in the stock market like this, where like earnings reports like this come in, it's really good. You know what I'm saying? This is one of those good opportunities. So make sure you, even if you don't trade this for real, make sure you at least paper trade Apple. I would say at least for the next 30 days going out, and just see what type of results you get. You can wait a day or two, before you make this trade if you want, and that this has to calibrate. It's a lot of volatility right now, so a lot of people trying to ride this wave going up. But most of the time when it hit a resistance like that, it typically goes down before it comes back up again. And sometimes it takes a day or two or even 3. Sometimes to calibrate and figure out what it is. Sometimes it just keeps rallying. Like if you look at right now, you look at what's going on with WWE. I don't know what they did today, but like I know like WWE is just rallying like crazy. So like it really ain't a lot of dips that you can really get on that. But like sometimes you do get situations like that, like this. It's just beast mode. This thing was at what? $40. When was the last time I seen it at $40? Just back in May. Now it's about $8. This thing is doubled in 3 months. You know what I'm saying? And like this was a dip. I guess you could have got here, but like it's really not too many. It just keeps going. So like I don't know if this is what's gonna happen when if this is what's gonna happen here with Apple. They're talking about breaking records. Like Jim Cramer even got on here and even said something about it breaking. This could be $300 if you see this right here. Kramer says Apple stock could have been 300 price target if it were only valued properly. I don't know. That sounds kind of outrageous. Let's see what he says.
My mission is simple: to make you money. I'm here to level the play.
And they're gonna flag the video with that audio like that. Let me turn this down. I don't want the audio, but you know, a lot of times when stuff rally like this, a lot of analysts get up here and say a lot of reckless stuff, and like Kramer is known for saying stuff that's kind of reckless, but he's saying that, you know, it could have a $300 price. I don't know. I just kind of want to see what he says.
Welcome to Kramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sooner or later, every sell-off comes to an end. And when that happens, you get a day like today, where the Dow climbed 108 points, S&P gained 0.49%, NASDAQ jumped 0.55%. End of the month? I don't know. A lot here. We've had two different sources of selling for a while now. Ever since the disaster that was Facebook's latest quarter, FANG and friends have been facing what feels like an existential crisis. And ever since our government started escalating the trade war against the Chinese, investors have reacted with wholesale revulsion toward what I call the China stocks. The stocks of companies that get a significant percentage of their growth from the People's Republic. These two themes have bred so much selling that they dragged down the entire market. Until today, that is. Today, the sellers took a break, a breather. They walked away. And we saw what happens in their absence. Stocks fly up. Now, it didn't start that way this morning. At the open, Facebook began what looked like yet another swoon. By the way, we call this reloading, as in the sellers have reloaded and they're back again to give you more mayhem. I can tell you how it works behind the scenes at the big institutional houses. If you're running a hedge fund, you'll get a call from your broker who says, "Oh no, the seller's back. He's not done. He's reloaded." When you get that crucial bit of guidance, the natural move is to say to yourself, "Hey, I'm not going to take my life in my hands. I'm not going to catch a falling knife. I'm going to walk away." And that's what most money managers would normally do. But today, the Facebook sellers walked away. Maybe they're done. Maybe they've just stopped. Maybe they're hoping that the bids will build, another term of art for the possibility that buyers will finally surface around the last sale. The hope is that they'll stand there buying stock, sop it up as the seller reloads and prepares for another volley. For whatever reason, though, the sellers chose to hold their fire today, and that was something that became clear around 11 a.m. And into that vacuum, you got a gap up, not just for Facebook, for almost everything. A smaller version of the gigantic gap down for Facebook, though. So after relentless pressure, the stock of this once red-hot social media company actually rallied. It finished up $1.52. Granted, the gap is minuscule compared to the Grand Canyon of a selling chasm we experienced last week. Still, the absence of downward pressure allowed buyers to come out of their foxholes and buy a whole slew of tech names. It ignited a true tech rally. Will the buyers maintain control of the narrative tomorrow? Yes and no. Yes, because of Apple, which just this evening reported remarkable numbers confirming my own admonition that you should own, not trade, the stock of the greatest consumer products company in history. Notice I didn't say tech, greatest consumer products. But not necessarily to Facebook, only because there's so many analysts I think are ready to jump ship on any upward move. Sell. So now that we know why tech rallied, the lift of Facebook, let's talk about this remarkable Apple quarter reported after the close. Let's talk about this one with sharply better than expected revenues, the fourth consecutive quarter of double-digit sales, and a truly bountiful bottom line. On top of that, we got terrific guidance for next quarter, and once again, a fantastic service stream, $9.5 billion. That is a remarkable 31% increase from last year. But you know what? I'm beginning to have a problem extending Apple's prowess in the after-hours rally to FANG, my acronym for Facebook, Amazon, Netflix, and Google, now Alphabet. Because amazingly, despite Apple's consistency, it gets a much lower price-to-earnings multiple than what is rapidly becoming the episodic nature of the four FANGs. Even more galling, the stock of what I've urged you long time to own and not trade isn't even valued like a regular tech company. It's valued as if it were some sort of sturdy cyclical industrial. I'm telling you, this is poppycock. Given the rapid growth of that service stream, this company deserves to sell at a price-to-earnings ratio that is more like a consumer packaged goods company. In fact, it should be covered by the same analysts that follow a Procter & Gamble, a Clorox, a PepsiCo, a Colgate. Because if it were, I could argue it should be valued at well north of $280 instead of about $200 where it is right now. That's right, you heard me, $280. How did I dream up that number? Because the organic growth of these so-called steady Eddie companies is nowhere near that of Apple. The cash return to shareholders is nowhere near that of Apple. The brand loyalty is nowhere near that of Apple. The worldwide pervasiveness is fractional versus Apple. I know if I were running research of a major Wall Street firm as of tonight, I would strip my tech analysts of this stock and place it squarely in the realm of my consumer products group. So that's how I could explain how the stock should have a $300 target, not a $200 target, which I think it'll eclipse tomorrow. How, again, do I get this? Let's understand each other. I see Apple as a razor blade story, and Procter & Gamble, which is the razor blade story of Gillette, had 1% organic growth, and it gets a 20 multiple. Come on. This is craziness. Apple's too cheap. How about the other big gainers today? The China stocks. Right around the opening, we heard that Treasury Secretary Steve Mnuchin is chatting privately with a high-level Chinese official about restarting trade talks. 100% hearsay. We have no idea whether there's really anything going on, nor do we know if talks will lead.
I ain't gonna do all that, but yeah, you heard him basically give you a reason why he believes Apple is worth over $300. His line of reasoning is there. You know what I'm saying? Will the traders actually take it there? I don't know. You know what I'm saying? But like he said, there's one thing he says that I do agree on is that I believe that it will go past 200 tomorrow, even though it may come back down. But I do believe it'll find some resistance above $200 tomorrow. You know, it's just rallying right now, and the market really needs this rally right now. So I think today was could be for the most part the end of a sell-off, even though there might be some downward pressure, for some people trying to basically recover from the losses that they took for this sell-off. You might get a little downward pressure there, but I think for the most part the sell-off is closed out today with this Apple earnings. So it'd be interesting to see how this carries out for the rest of the week. If you're not trading, man, I highly suggest that you really start doing at least some paper trading. Download the Thinkorswim app, learn some of the tools and stuff like that, and you should be good to go. And I do want to just say, for while I'm on here, I just want to show you guys something, just a quick tip for beginning traders. If you don't know this, this is something that was one of the first things I had learned, was a thing called the MACD. The MACD, you can go right here, go to studies, you go to quick study, moving averages. You know what I'm saying? And there's different type of moving averages. You know what I'm saying? I'm gonna do the two lines. Moving average, since moving average convergence, divergence. Basically, what does that mean? In a nutshell, it's like, okay, there's two lines here. So let's go here. Actually, no. Let's do like this. I'm gonna double click on that, and I'm gonna bring this up. And let's see. The fast average, we're gonna make the color blue like this. The slow average, we're gonna make purple. Okay. So let's go with the fast length. We're gonna do typically what a lot of people do. A good way to look at it is the 20 or 50. So some people do 50, some people do 20. I'm gonna tell you exactly what this means in a second. 20, and then 200. There's 200. Okay, so these are moving averages. What I just did here, I did the fast length at 20 days, and I did the slow length at 200 days. What does this mean? These are moving averages. So if we click OK here, what happens is you see this right here. The purple line is basically the average of what this whole stock has been doing for the past 200 days, and this is what it's been doing for the past 20 days. So how do you read this? Is that when you see this blue line cross over, this is typically a breakout. And when you see it go back under, this is typically a sell off. So you see a situation like this, when it rises above the 200-day moving average like this, a lot of people typically buy in. And you see it kind of squeezing itself back down here. This is where people sell off. The closer it gets to this purple line, people sell off. And as it starts to move away further, people buy in. This is called moving averages. So you look for symbols and signs. Let's go to a 10-day chart. You look for signs when it dips below. You see how it bounces off here and it bounces off. It kind of dips below, bounces right off. This is how you can kind of tell when people are buying in and when they're selling off. You know, according to this 20-day moving average, you know, you see how here I dropped and how it came. You know, it brought it down, and that's what you know, certain traders call this a snapback, like how it's constantly snap. When you put it on 20 and 200, you see how the 20-day moving average is constantly snaps back. But you see how here I dipped over here and there was a huge sell-off. Like right here, whenever you see this line cross off like this and how it dipped below the line, right here, if you're a trader, if you're doing following 20, you know right there that was a major support level that it broke through, and it was going to be very hard for it to come back above. As you see, it did, but today it finally broke through. But it was very challenging. Once it crossed under this line, it became very challenging for it to get back up. Why? Because every time it gets back up, people are selling off. Like anybody who lost money here, if you lost money here and then you try to hold on and then you lost even more money, kept going down, well, as it starts to come back up, you got all these people trying to sell off just to break even. You know, so like this huge sell off, this red line right here, it's going to be hard for it to get back above that red line because every time it gets up here, you got people waiting for it to hit that so they can sell off just to break even. So this is what's called resistance. And they're like if they wanted to go back up, but they got at least break even. You know, if you done lost $500, but then you see it and came back up to zero, you know, you can sell off right there. Then you sell off, you're putting more downward pressure. So like that's what happened right here is that there was so much downward pressure, but these earnings shot it back up above this purple line. So this symbol's a breakout. So you can see like today you right on the cusp of a breakout right here. That's why I'm making this video. It's this right here because you see like okay, the 20-day moving average is crossing above the 200-day moving average. So this is about to pop. You know, this is a breakout. A lot of people buy in on these types of things. You know what I'm saying? This is a moving average. Also, too, I want to tell you, you know, while you're looking at the Thinkorswim platform, you see these right here represent the earnings. You know, you see how it said the earnings was $2.28 estimate, and it beat it. So when you scroll out, for example, like you do the 1-year chart, you see all these down here. These is when all the earnings came. The green ones when the dividend came. This is when they gave out their dividend. This is their earnings reports. And same thing as I zoom out to the 1-year chart, you see how the 20-day moving average, how it bounces off of the 200. You know what I'm saying? So this is how you read the chart. You see how here it kind of dipped under. This was a sell-off right here. This is a major sell-off. You know, when it dipped under this 200-day moving average right here. Same thing kind of here. You know, so and you see how you know, if you buy in here, if you buy in on these dips, you can kind of see like if you would have bought it here, you see how you would have made money. And when it comes down like this, you see that? Like if you would have bought here, if you would have bought here, you see how it shot up? If you would have bought anywhere here, you would have caught all of that. You know, you don't want to buy it when it's at the top like that. You know, you want to buy it as it, you know, gets closer to the 200-day moving average, and that's how you know when it's high or low. You see what I'm saying? So I hope you learned something from this. Like I said, this is called the moving averages, the 2 lines. To get that, you can go back and see how I did that. If you got any questions, make sure you leave it in the comments. Appreciate everybody watching. Make sure you get excited about trading, man. Make some history for you. You see, Apple's making history, man. Be a part of something that's making history. It's really out. It's a free and open market. All you do is follow the market and be passionate about it. You know what I'm saying? And you can be a part. You can be a part of a company that's making. You know, people ask you, where were you when Apple broke its record? When they made $60 billion and it moved up to 70, moved 80. You know, what were you doing? You know what I'm saying? Were you sitting by letting it pass you by? Or were you properly positioned? And you know, that's what this channel is about. It's not about sitting there watching these videos. I want to make sure you get properly positioned in these types of situations. Alright, so make sure you subscribe to my channel if you ain't seen this yet. I appreciate everybody watching. And I will see you guys, as I always say, in the algorithm. UD. Later, Gator.